So today, looking at using the search functionality within online share trading to narrow down searches, etc., etc. It's never going to tell you, quantifiably this is the share, but we've got 400 plus stocks in the market, almost 100 ETFs and ETNs, and this can certainly help you narrow down within certain themes and the like that you'd be looking for. I'm going to be doing this live, which does mean the risks of internet, but so far my internets are working fairly well, but some processes will obviously be a bit slower. The first point is, where do you find it? It's under Instruments, Filters. You've got Share Filter. You've also got Warrant and Installment Filters, but today, obviously, we're focusing on Share Filters. You get hit with this page here. I'm going to start from the bottom, work the way up, and then we can go and look at some actual practical processes. The first thing is, how are you going to want to be sorting your resultant search that you do? Typically, I'm going to be looking at either market capitalization. Usually that's what I'm going to be wanting. So I'll put there market cap. It'll show me then small to large. Do you want to exclude warrants? Yeah, I want to exclude. Profile media consensus. So all stocks that are sell, buy, or holds, or those that have no forecast. Profile Media polls the investment analyst community, asks their recommendation of stocks, and we get probably about 80 or so shares that then have results on them. And we'll do a buy search in a moment, but let's get to sector. What we have here is sector, not index. And that's very important. So you won't find top 40. You won't find mid-cap or any of those. What you have got is literally just the different sectors. So, for example, aerospace, nothing. Airlines would be Comair. Apparel, yes, we've got some auto parts, maybe combined motor, but I'm not. Automobiles would be better for that. So I don't use this with one exception if I'm looking for ETFs. If I'm looking for specific ETFs, then I do that search on exchange traded funds. Other than that, I am running pretty much just saying everything. It would be neat if we could have indices. In other words, if we could say, just show me the ones that are for example, top 40 stocks or mid-cap stocks or something. But we don't, so we live with what we have. All I've got here is nothing selected, but I'm just looking, so how many stocks generate a buy recommendation? So we've got 45 shares that are generating buy recommendations. As I said, this is the view of the analyst community. We can take as much value or as pinches of salt, but certainly when we're filtering down, it can be something that's useful. You might want to go contrarian and say, well, hang on, show me all of those with a sell. Sasol, that's a good call looking at today's movement. Netcare considering yesterday's, but only 9 on the sell side. But let's say for all. What we then have up at the top here is we can now search using 5 different criteria. And I'm going to start with the different options. So we can say is equal to, which means exact. Dividend yield is equal to 0. You will find companies that do not pay dividends or haven't paid in the last 12 months, last 2 reporting periods. Less than or equal to, greater than or equal to, less than or greater than. Let's leave that there for now. Excuse me. So here is then your criteria that you can then search under. Some obvious ones, your previous day volume value deals. I never use that. Dividend yield, earnings yield, which is obviously the inverse of a PE. PE, last closing price. We've got 12-month highs and lows. We've got percentage price changes over a week, 4 weeks, 12 weeks, 52 weeks, and year to date. So quickly we can go have a look at year to date, greater than 0, sort by, and here I am going to say year to date. So we're looking for all the shares that are green so far for the year. And the bottom will show you that group 5 is the best, up 394. And then it runs through global, etc., visual, and etc. 238 shares are therefore done a return that is greater than 0. So positive year to date so far. This includes, as you can see from there, there's an ETF. it's including the ETFs, it's including absolutely everything in that process. What you've got is the price changes, and that is the same as that. What you've got is averages as well. So you've got your price change for a week, 4 weeks, 12 weeks, 52 weeks. I used to use this when I was doing momentum. So I would say, right, show me price changes over 52 weeks. I want large cap stocks only. So let's go look at market capitalization greater than, and let's go with 10 billion. Is that too many zeros? That's too many zeros because this is per million. So 5 zeros gives us 10 million. Excuse me. Price change 52 weeks. And it'll now show you all the movers, Implats, Anglo-Plats, Anglo-Gold being the winners there. It is now showing you the large stocks. In other words, stocks with a market cap of more than 10 billion. You will note that in the return data that it gives you the name, gives you the code, gives you the profile media consensus. Delayed price will be 15-minute delayed price. If it's after 5:15, that obviously is the close. It then gives you the piece of data that you look for, 52-week, and in this case, market cap as well. So it outputs all that data. Question coming through, can it be easily taken to Excel? Nope. What you do if you want to take it to Excel is good old-fashioned copy and paste. What I do is I copy into Notepad and then copy and paste into Excel so that I get rid of the formatting, etc. Reset filter, favorite button on the whole thing. So what you've got is your percentage price changes, and then you've got your average volumes, values, price over 52 weeks, and deals. Again, not something I've ever used, but certainly they are there. Market capitalization, useful for finding large stocks, useful for finding small stocks. I mean, let's do a market capitalization on stocks of less than 1 billion. And that then comes out and gives us a list of 258. What are the small caps? These are stocks that are worth less than $1 billion. That's an ETF coming in at only a very modest 6 million. There's a 1 million ETF, and then those are dud stuff. We can't remove them out. Couple of smalls, etc. But useful if you're looking for the large caps, the small caps. If you're looking for all the trillion plus, etc. Wrong button. I want to reset. And then comes some interesting stuff. Dividend forecasts, and you've always got 3 years of forecast. So you've got the next 3 financial years. So we're currently in 2019. So forecasts for 2020, 21, 22. Earnings per share, and note earnings per share forecast, not headline earnings per share. We've got earnings yield, which is again the inverse of PE. We've got dividend yield forecast, and we've got PE forecast. The trick with the forecasts is we saw that there's a fair number of stocks that Profile Media does cover, but how far out do they cover it? So let's say we want dividend per share forecast greater than 1 cent. In other words, companies that are expected to pay a dividend in the 2020 financial year, and we filter on that. And sometimes we wait. So now it's going and crunching. Large database, running the data, running my internet. And we get a giant 155 with a expected for 2020. But if we drill it down to 22, suddenly we've only got 3. So that's just because there's simply less coverages on expectations on the dividend forecasts going forward. So here we get, but it's only, as I say, it's only 3. So as we go further into the future, there are less views and therefore less data in that sense as well. So those are quite fun, and we can look at PEs as well, etc. And if PE maybe less so, but earnings per share, what it is doing in your PE, you're getting a sense of growth. What would be nice is if we could say, well, hang on a second, what about growth? But that's where we get to the ratios down here. So the ratios are, for example, return on capital employed, return on total assets, operating profit margins, which is really, really fun. Debt to equity. Problem with operating profit margins is that, a NASPAS compared to a Pick and Pay, fundamentally different. Ditto with net. But now we get a debt to equity ratio. So, debt to equity less than, and I'm doing this in particular. Now, how are they doing their debt to equity? Are they using percentages? In other words, we must have 100 as a value, or are they using whole numbers? Short answer, don't know. So what do? We do a quick filter, in essence, to get that data back to us. So they're using whole numbers. In other words, that would be 56%. So sub 1 is all the ones, and that's like, okay, hang on a sec, but let's run this the other way. Debt to equity ratios above 1. So now we start to see some stocks that have got fairly chunky debt to equity ratios, and some stocks like Alexander Forbes there, where the data just looks wrong. I would want to go and verify that data. But we can start to get a sense of some of these stocks that have got their debt to equities are a little out of kilter. Question coming, how much can we trust the data? So simply don't. What I use it as an initial scan for me. The risk is that something falls through the cracks, but once I've got the data, I'm going to go and verify it myself. And that's just, that's just me and data. I'm a big fan of saying let's rather always be verifying the data. Other ones, for example, so how about shares that have got a net percentage, so they're below net asset value as price, so net asset value greater than share price, and there are a bunch of stocks and a bunch of these stocks are, Basil Reed is in bankruptcy, etc. Okay, so we've got a bunch of stocks where net asset value is greater than share price. Let's add a second filter. Let's say where debt to equity is less than 1. So let's be fairly aggressive in there. So now we're looking for shares that have got trading at a discount to net asset value and don't have a lot of debt. Bunches of reasons why. There we actually have a debt to equity ratio which is negative, which is totally weird. And I look at this and it's like a lot of stocks. So what's the first thing that I then typically do is I say, well, okay, let's go and say we want market cap greater than 5 billion. Is that yet? And now we're getting down to a list of 34. You'll see a fair bit of some of them we know the stories of Brates, for example, a lot of property stocks coming through. But now we're narrowing ourselves down in terms of what are we looking for, what's what in terms of investability. Question came, how do you know which to put in? You don't. So you might come, and I'll show you some examples in a second. You might come to the filter with very clear ideas of what you're looking for. You might also come to the filter and say, I just want to narrow down. What are the things that matter to me? So what I want to add to this list is I want to say, I want them to be paying a dividend. So I want dividend yield greater than 0. And I also want to have some positive momentum behind it. So price change year to date, I want greater than 0. So I've hit my 5. You can't have more than 5 searches. And now I'm down to 7 shares. Lipstar, AECR, ARM, Capco, RDI, I don't know what GTC is, and Theresa. So you've suddenly narrowed it down to 7 stocks to go and actually have a look at. On that list, the ones, Capco, I know the story of. The ones that would interest me would be, okay, let's go have a deeper look at ARM, AECI, and Lipstar. Is there perhaps something happening there? Is there perhaps something that I should be paying attention to? Is there perhaps an opportunity in one of those particular shares? So instead of starting with our market of 450 shares and saying, Yilza, where do we even start? We've immediately narrowed it down to say, here we go, 7 stocks. Let's start playing with just 7 shares. Go verify the data, go look for other inputs to it as well, etc. But certainly it makes our life significantly easier. What we've got down here with the ratios is bunches of them. Price earnings, price sales per share, price to net asset value, cash flows. And then down right at the bottom, we've got some averages. So averages are quite useful because simply, debt to equity is great, but it's a snapshot in time. Aren't we better off looking at a debt to equity over a period of time? In this case, we've got 3 years, profit margins, operating margins, etc. So now we can start really delving in and getting ourselves, okay, we're starting to find trends rather than one off in the sky. Yeah, and so some of the searches that I like to do sometimes, one of my favorites is always that where my NAV to price. So I want my NAV to be above my price. Then what am I looking for? Give me some nice bit of dividend yield. So let's say a dividend yield of 3%. And then I search just to make sure, okay, I got 39 stocks here. Let's go and find ourselves a sort of mid-cap stock. So market cap greater than 5, but less than 10 billion. So we got 2 market caps there. And how does that filter out? Gives me 2. And I can tell you now I have no interest in that. So something here is just not being attractive in a sense. What do I then need to filter? So maybe we remove the upper limit and see if there are any large cap stocks. Now we've got a couple more. Into Imperial, British American Tobacco comes up. Now is a larger selection to look for. You're looking for growth stocks, for example. So what would indicate a growth stock? A growth stock would typically be a price earnings ratio of probably fairly high, so let's say above 30. Typically a dividend yield moderately low, let's say 1.5. Point, not comma, is very, very important. And what else might indicate me a growth stock? It's mostly going to be that. What I would like to see, yeah, I mean, we could look at some of the changes here, etc. But let's filter on that. A bunch of potential growth stocks. Some of them definitely, some of them definitely not. Delta, for example, that PE dividend yield. Okay, they're saying above 0. I take them on that. Delta share price has been collapsing. Expectation that so will the earnings in time. There's Stadio coming up. Capco keeps on coming one way or another. PPC, that surprised me. Truthfully, a lot more zeros than I would have expected in the dividend yield. I would actually like to have some dividend yield in the process. What you will see in many cases with the property stocks, dividend yield is 0 because they pay income, not property. So remember that in the process as well. If you're looking for the deep value stocks, you want dividend yield of greater than, let's say, 5. You wanting price to net asset value greater than 100. And there you've got yourself potentially 18 great value stocks. Let me go back to here quick, because there's actually a presentation I did earlier in the year. And there it is. So there's actually some formulas here. You will find this if you go to justoneLap.com, search Graham, and you will find the link. And there, so this is using the Benjamin Graham search process, where you're looking at price to assets, you're looking at PEs, had to be above 0, below 15, above 0. You want a dividend yield because you want dividends to be paid. And that initial search here, and we're looking at the Graham-Dobbs defensive theory, narrows down your stocks, and then you've got to go and work through it. And ultimately, we ended up with just a couple. And all of them, in all cases, then fall through the cracks because there's further searches we need to do. On the enterprise process, again, fairly short, fairly simple, where we go and we search using the Dobbs-Graham theory. We get a relatively short list that then the only one that came through on it ultimately on all of this process was actually Barlow World, which came from the defensive, if memory serves. Yeah, there it was there. And so I went off and bought myself some Barlow Worlds at about that 127 Rand, which it had been trading at that point in time. So you can come at it from, if you've read the little book of Common Sense Investing, they've got processes through there where you can go and find those stocks that meet your requirements, that narrow down the filter in a sense. We're hitting 20 minutes, which is what I expected us to be taking. I'm not going deep into the different ways to search, etc. Rather just that tool and what it can be used for. But if you've got questions, drop them in the Q&A box. Yeah. So one question is, what about? So if you want stocks that are tax free, the tax free enabled. So you don't. That's not a search there. This is a completely different search where it says to you, here are all the stocks or the ETFs rather, that you can buy into a tax free investment product. You could take it a step further. Do your share filter. Say sector is, as I said up front, this is the one time when sector does work. And let's say we're looking for positive momentum. So we're looking for stocks that in 1 week are up more than zero, and 4 weeks are up more than zero. These are stocks, of course, these are ETFs. 12 weeks are up more than zero. And lastly, year to date is up more than zero. I have no idea how many I'm going to find, but oh goodness, 10. What it tells me with these 10 is that they have consistently been moving higher. Now, not by a lot. Look at that. 1 week, they're up 1.18. 4 weeks, they're up 1.29. But what we do see is that these are the stocks that have continual growth behind them. They've just been edging higher step by step by step by step. And they're not stocks, of course, they're ETFs. We could go back and say, show me all, and let's filter for those with buy recommendations. Now we get 5. Afrimat, Anchor, Libstar comes up again, Long for Life, MMI. Question coming through is, could you use this as a trader? Yeah. I mean, so what they don't have is, search for RSI above 20 or RSI below 80 or something like that. It's not directly linked to technical analysis, but what you've got here, in essence, is a search that has a momentum theme behind it. 1 week, 4 week, 12 week, year to date. Year to date is about 18 weeks at this point. So what it's saying is that these have been just moving. Someone says to drop in the 52 week as well. And let's leave that buy recommendation, but I think Afrimat. and let's not get too excited. Hey, year to date up 8.76, 52 week up 8.25. So actually done better this year than over the last year. But let's drop that consensus buy to all. And now we have a list of 29 stocks that have certainly got some momentum behind them. And this is fairly solid momentum. Someone's being contrarian. Daniel, it's Daniel again and again and again. Daniel's saying, let's look for sell recommendations on that. Not a 1. So I know what you were doing there, Daniel. You were saying we were looking to see how wrong the peeps can be. And in this essence, it might be that they're not wrong. It might also be that we truthfully just have few stocks and we have very, very few sell recommendations. As a rule, that's just a global phenomenon. Yeah, so what I will, again, so there's many ways to skin value. So I'm looking for price earnings below 10, and let's look for a dividend yield greater than 3, and filter that. And at this point in our market, we come back with 98 shares. Now, there are points in our market 5 years ago, 12 years ago, where if you'd run that search, you would have come out with almost nothing. And some of them, choppies, are suspended and to all intents and purposes bankrupt. Some are pref shares, as these are here, Nampak and the Fashini Group, Barlow, AECR, Standard Bank, etc. So a bunch of pref shares coming through in the equation as well. But there are some, such as ARB, Bow coming through, CMH, Value really attractive, Sasfin coming back again, Invicta, ISA, great stock, lacks liquidity, CSG under pressure. Westcoal. Westcoal's just crazy. I mean, that's a PE of 2.66, and a dividend yield of 4.7. You'll notice the pref shares have 0 as a PE. Metrofile coming up. Comair. Wow, I didn't expect to see Comair there. Baldwin coming up. No surprise. Assel, no surprise. AECI again popping up. So what you can do is you start doing searches from different directions with broadly similar themes, and you're essentially distilling down to then a couple of stocks. And I stress it again. Go and verify the data, go and make sure that it meets the criteria. Just because it says these are the numbers, go make sure they really are the numbers. Because, as I'm sure Standard Bank will be saying, and they will say so here, caution. Just be careful. Yes, the data is as good as possible, but always be verifying data. I'm always just going to verify data just because I'm paranoid about it being bad. So, ladies and gents, we will park it there. We're on the coming up for the half hour. Use the tool. It's a there could be. I would like to see some other things. We could get really fun in terms of what we add to it, I suppose. Someone's like, all the stocks that are Stockwatch recommendations. Yeah, I mean, that would be great to add to it, but they're not there. Question coming through is, will we get it for technical analysis? Truthfully, I don't have sight of the development line at online share trading. I don't know, but if it does, it will come out as part of Viewpoint, as distinct, I imagine, from being the share filter, because that's very much the technical side. Easy enough to do, but I think it will be used in there. Okay, sorry, Carol, I hadn't understood your question. So what you're saying, Carol, is that you want to search on 7 things. You can only search on 5. So you search on the 5. Can you then search within that result? No, you can't. So what you'd have to do is search with 5 criteria, grab the list of stocks, dump it into Excel, go back, search on the last 2 criteria, grab the list of stocks that match, and then manually yourself see which ones match between the 2 searches. You can't then drill down into a narrower search in a sense like that. No. It would be great, but unfortunately not available. Cool. Ladies and gents, we will park it there. Thanks very much for your time today. We'll be back again. I'll be back again with a new webcast next month. Of course, the other folks will still be coming through. I think we've got Garth McKenzie. I almost called him Grant. Garth McKenzie coming with his market update shortly. Until then, ladies and gents, have a great day further. Cheers all.